Prime Minister Anthony Albanese starts his visit to China with trade on the top of the list of talking points. Federal Treasurer Jim Chalmers concedes the government needs to pull back on infrastructure spending as the Reserve Bank Board prepares to meet and probably lift interest rates. And Warren Buffett's failing efforts to spend $241 billion. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Monday, the 6th of November, 2023. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam. I'm here. You can see my cup of tea with me, fired up, ready to go this week. It's going to be a big week. We've got interest rate decisions. We've got Melbourne Cup. We've got bank reporting results. Very exciting.
So much. And immediately after the show, stay listening for Sean's chat with Matthew Haupt, lead portfolio manager of WAM Leaders.
WAM, of course, is the acronym for Wilson Asset Management. I talked to Matthew about the large caps, the mega caps, the banks, which bank he likes most, for example, some of the industrials. He gives us a few suggestions about the stocks he likes. Of course, we're not an investing podcast. Always get your own advice, but it's well worth a listen to Matthew if you are interested in investing in any shape or form, but particularly if you're thinking about some of the larger companies on the ASX.
Yeah, he's got precious information and some great perspective. I'll certainly be listening. So, Sean, the main story this morning, Prime Minister Anthony Albanese is in China in a visit that Beijing is describing as one of great significance that will provide both countries with a chance to review bilateral ties.
In comments that have a similar tone to those made when the Prime Minister was in Washington visiting US President Joe Biden early last week, Chinese state media, a mouthpiece for the regime, warned the Albanese government shouldn't be kidnapped by the United States in relations with Beijing. I think we heard it the other way around a week ago or thereabouts.
Trust and verify were the words.
Trust and verify. Fair enough. Clearly, there is still a long way to go before relations are normalised, with excessive tariffs still being levied on some products, and Australia's closeness to the United States a major concern for Beijing. Albanese received a full welcome when he touched down in Shanghai over the weekend. He spent yesterday at the China International Import Expo, where several hundred Australian businesses are showcasing their products and services.
Sean, the Prime Minister and Chinese President Xi Jinping meet today. What is on the agenda?
Well, geopolitics and the role China and Australia and the US play in the region, that'll be towards the top of the agenda, but so too will trade. There are still tariffs on about $2 billion worth of goods, mostly agricultural, while Beijing is reviewing sanctions on $1.2 billion worth of wine. Albanese yesterday said he wanted to see a reduction on tariffs on Australian lobster exports. Also, China wants to join the Trans-Pacific Free Trade Bloc, and Australia, along with Japan, oppose that move. I'm sure that'll get a mention. The Prime Minister said it's in Australia's national interest to have a positive, constructive and open and respectful dialogue with China, and he hopes to achieve that. He repeated his line that Australia needs to cooperate with China and will disagree where we must. He was also out there pushing Australia's latest tourism campaign. Its tagline, Adam, and I cringe when I say this, come and say good day. Oh, can't we do better than that?
Well, maybe, but you know what? I think it works.
Well, Chinese visitor numbers are about half what they were pre-pandemic. So I'm hoping there are a lot of Chinese people there seeing Anthony Albanese say, come and say good day and go and buy a ticket and turn up. Let's hope so.
I'll be pleased if they do. So, Sean, how did local markets perform on Friday?
Well, the S&P ASX 200 rose another 1% on Friday to finish at 6,978 points. For the week, the bourse ended up more than 2%. It kind of came home with a wet sail. Real estate investment trusts and industrials did best, while healthcare companies and financials also outperformed on Friday. Energy stocks did worst on the back of falling oil prices, while more defensive sectors like consumer staples, utilities and telcos also underperformed. Driving the market really in the latter part of the week was a decision by the US Federal Reserve to not lift interest rates, and commentary that suggests there might not be any more rate rises in the world's biggest economy. CSL did well on Friday, up 2.5%. Of course, it does a lot of its business in the US. Transurban, Goodman, REA, they were all up by about 2%. Commonwealth Bank, Wesfarmers and Newmont, i.e. Newcrest, all rose around 1.5%. One of the most interesting, or a couple of really interesting ones on Friday, Treasury Wine Estates started trading again after its announcement that it was spending $1.6 billion buying a Californian winemaker. Yeah, share price down 8.5%. Whew, hard. The best on the day, though, was Block, owner of Afterpay, after its September quarter earnings results on Wall Street on Thursday night, Friday morning Australian time. It ended up Friday, so block trades on the ASX as well as on Wall Street. Block on the ASX ended up 25%.
Wow. So, Sean, what is happening in international markets?
Well, it was another strong session on Wall Street over the weekend. There are a few economic figures. Non-farm payrolls in the US fell more than expected. The unemployment rate edged higher. Wages rose slightly less than expected. Basically, they kind of add to this argument that the Fed doesn't need to do any more rate hikes. That certainly helped Wall Street. Gold's up a bit, oil's off a bit, and Bitcoin's trading around $35,000 a unit. Also mentioning that the Aussie dollar bounced over the weekend. It jumped more than 1 cent to start. It starts this week back above 65 US cents. Basically, that's all about the rates news in the US. So if they're on hold and if they're going to be lifted tomorrow here by the Reserve Bank, it means the interest rate differential between the two countries narrows. US rates are higher than Australian rates, but that differential narrows, and that makes the Aussie dollar relatively more attractive.
Sean, with a higher Australian dollar, are you thinking of travel again?
Well, look, I wasn't, but I must say, when I saw what the Aussie dollar, I thought, I must talk to Jackie about what's got coming up in the next 6 months or so.
Brilliant. We'll be back in a moment with the rest of the day's business news. Treasurer Jim Chalmers has warned that the government needs to cut back spending on infrastructure to help get inflation under control.
The comments come ahead of tomorrow's Reserve Bank board meeting, which is widely tipped to lift interest rates, taking the cash rate to 4.35%, which in turn would push the standard variable rate on a mortgage towards 7%. Speaking on the ABC yesterday, Chalmers said the government needs to make some tough decisions about its infrastructure pipeline. The comments come days after the IMF, the International Monetary Fund, warned that a record $30 billion in infrastructure spend had pushed the Australian economy, beyond its limits. Chalmers has come under fire over the past couple of weeks for suggesting rates don't need to rise. Now, those sort of comments put pressure on the new Reserve Bank Governor, Michelle Bullock. Notwithstanding that political pressure, bond markets have priced in a 69% chance of a cash rate rising tomorrow. 33 out of 35 economists surveyed by Bloomberg think that rates are rising tomorrow. We have a great chat to Stephen Kikoulis in our Week Ahead show after this program, talking about rates as well. What I think is interesting, it's not a lay down misère. So mostly these interest rate decisions, people are pretty confident one way or another, and there probably will be a rate rise, but there's just this lingering thing that maybe they'll hold off. Anyway, we'll find out at 2:30 tomorrow afternoon. Adam?
Yes, Sean, in the parlance of the season, it is no sure bet.
The spring racing season. I like it.
Sean, it was the showdown that everyone was waiting for. Well, certainly investors were. The Qantas board, probably the most maligned board this year, versus shareholders at the annual general meeting on Friday. So how did it turn out?
I'd say shareholders won, board yet to get off the mark. It was a sometimes tense affair, with Chair Richard Goyder having his hands full in response to some pretty pointed questions around the share price, the benefits to the Prime Minister's son, the use of loyalty points, that sort of thing. The remuneration report was the pointy end of the meeting, and 83% of shareholders voted against the report. Now, quite a few years ago, National Australia Bank got an 88% vote against a shareholders' report. That still holds the record, but I think this one comes in second. That's, of course, the report that included Chief Executive Alan Joyce leaving with a $21.4 million payout. Goyder called it a very clear message from shareholders. 83%? 83% of shareholders voted against the report, and he said it's very clear. Good point. Remuneration Committee Chair Jacqueline Hay, she told the AGM that clawback provisions in Mr Joyce's contract could still see him lose $14.4 million worth of entitlements. Be very interesting 12 months' time if a shareholder asks how much of that he actually did lose. Early in the meeting, all directors, including admin Todd Sampson, were re-elected to the board. The board, including new Chief Executive Vanessa Hudson, really struck an apologetic tone for what's happened at the national carrier. A bit of a mea culpa, but still a long way to go to work out their public relations, I think, Adam.
Sean, moving on to Macquarie Group, the first half profit tumbled 39%, but that didn't prevent the board from agreeing to a $2 billion share buyback.
Market volatility and fewer opportunities to buy and sell assets were behind the poor performance for the 6 months to the end of September. Net profit was down to $1.4 billion below expectations. Given the global economic conditions, persistent inflation and geopolitical events, Macquarie will take a more conservative approach in coming months, they said. There was fall in earnings in the asset management business, the investment banking, and in its commodities and global markets business. The Americas, Europe, Middle East and Africa and Asia now make up about 2/3 of Macquarie's income and roughly half its 21,000 employees.
Sometimes it's just hard to remember how big Macquarie Bank is. Those numbers are huge, Sean.
Yeah, they really are. And given they're not really a retail bank, there is a retail part, but they're not really a retail bank. Their number of employees aren't that far behind, the Westpacs and National Australia banks of the world.
Yeah, great point. Great Australian success story. Sean, Atlassian, the Wall Street-listed Australian software company, has announced larger losses, sending its share price down 10% in after-hour trading.
The company's result wasn't quite a disaster. It made a net loss of $32 million though for the September quarter. It was worse than the June quarter when it lost just $14 million. Revenue was higher. That was good, but investors just aren't that enamored with loss-making tech stocks at the moment. In fact, the whole tech sector could well come under pressure depending on what happens to interest rates. Atlassian has over 40,000 customers who spend more than $10,000 in annualized recurring revenue terms, the company told investors. I think that's quite amazing. 40,000 customers spending at least $10,000. That number was about 25,000 2 years ago. So certainly Atlassian is still on a growth trajectory.
Sean, property company Lendlease and tech giant Google have ended a major deal in the United States that would have seen them develop $23 billion worth of projects in the San Francisco Bay Area.
The move effectively brings an end to one of the listed developers' largest ever plays outside of Australia and comes as it also faces uncertainties about projects in Britain and locally, and looks to sell off some assets. Lendlease's share price has been falling on the back of concerns that it will struggle to meet ambitious targets to transform itself from a low-margin builder to a global funds and investment company as the property cycle sours, according to The Australian. Now, on Friday, its share price did close up 1%, saying that people weren't too worried about the fact that they're not doing the deal with Google. In fact, some investors might quite like the idea. The San Francisco area project was struck back in 2019. It was billed as bringing about 15,000 new units and a mix of condos, multifamily, co-living and affordable housing to the region where accommodations in very short supply. San Francisco is not that different to Sydney in many ways. Anyway, the deal's off.
Sean, as we move into the summer sporting codes, the Ashes broadcast will remain split between two networks until at least 2031, after Nine Entertainment secured the rights to the next two Test series in England.
Nine will pay about $40 million to air the 2027 and 2031 clashes in the biennial cricket contest, according to a story in the Financial Review. The rights are likely to remain jointly held by Nine and pay TV company Foxtel. The deal ends Seven West Media's efforts to bring the entirety of the Ashes onto its free-to-air network. The England and Wales Cricket Board apparently wanted more than $50 million for the two series. Last month, Seven told the ECB they couldn't afford to pay that much. Nine's come in and offered $40 million. They're going to get it. Of course, Seven hosts the Ashes that are held in Australia. So Nine, we watch the Ashes that are overseas on Nine, the Ashes that are in Australia on Seven. In some ways, the one overseas you would think wouldn't be as popular, except for the fact that they're often played in prime time. So the TV stations certainly like to get those ones.
And a big expat community out here too, Sean.
Yeah, absolutely. That's so true.
Moving on to international news, former Prime Minister Scott Morrison landed in Israel on a solidarity visit to the Jewish state, along with former British Prime Minister Boris Johnson.
It's quite the pair to turn up in Israel. Morrison's actually the first Australian politician to visit the country since the October 7 massacres committed by Hamas terrorists. He and Johnson were scheduled to meet with Israeli President Isaac Herzog overnight, as well as families of those held hostage in Gaza and soldiers with the Israel Defense Force. Meanwhile, US Secretary of State Anthony Blinken has been in the Middle East pushing for humanitarian pauses in the attacks. A deal to allow foreigners and dual nationals to start leaving the Gaza Strip is at risk of collapse as Hamas and Israel accuse each other of undermining its terms. A US official said Hamas was using the deal to evacuate some of its wounded fighters.
Sean, FTX founder Sam Bankman-Fried's spectacular rise and fall in the cryptocurrency industry, a journey that included his testimony before Congress, a Super Bowl advertisement, and dreams of a future run for president, hit a new bottom late last week when a New York jury convicted him of fraud in a scheme that cheated customers and investors of at least US $10 billion.
After a month-long trial, jurors rejected Bankman-Fried's claim during 4 days on the witness stand that he never committed fraud or meant to cheat customers before FTX, once the world's second largest crypto exchange, collapsed into bankruptcy a year ago, according to a report on Associated Press. US Attorney Danielle Sassoon said Bankman-Fried turned his customers' accounts into his personal piggy bank, with as much as $14 billion US dollars, certainly 10 billion, but as much as 14 billion US dollars disappearing.
Sean, Berkshire Hathaway now has a cash pile of US 157.2 billion. That's 241 billion Aussie dollars, waiting for good news for Warren Buffett to work his magic.
It's difficult, isn't it, when you've got about 241 bill, trying to work out what to do with it.
I wish I knew, Sean. I wish I knew.
Over the weekend, the company reported third quarter earnings of nearly 11 billion US dollars, that is, higher than the previous year. Now, the main reason there is that all that cash he's got is sitting in treasuries, and of course, interest rates have gone up. So he's getting a much better return on it, like that. Berkshire's insurance business has also done better, similar to other insurance businesses around the world. Now, Buffett's ramped up acquisitions in recent years. He's bought into a coal company from memory. He's certainly bought into another insurance company. But basically, he hasn't been able to find enough good, big deals to spend his money. Instead, he's been doing share buybacks. Basically, too much cash. What a challenge to have.
Inspirational. Sean, up next is the Fear and Greed Daily interview with Matthew Haupt, lead portfolio manager of WAM Leaders.
All about investing in large companies. Think the big miners, think the big banks, think the big industrial companies. It's a very, very interesting chat with Matthew, particularly given this week we start to get the, three of the major banks, National Australia Bank, Westpac and ANZ, provide their results over the next couple of weeks.
So true. Thank you, Sean.
Thank you, Adam.
It's Monday, the 6th of November, 2023. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, X and Facebook. We hope you have a great day.